For more on the OPEC deal and its possible impact on oil prices, we're joined from Tokyo by Karl Larry, Director of Oil and Gas for Frost and Sullivan. Thanks for joining us, Karl. This marks the first time that OPEC has decided to cut production in 8 years. Yet oil prices have been falling dramatically for 2 years because of oversupply and a drop in global demand. Why was OPEC hesitant to cut production until now?
Well, I think that the Saudis especially thought that they could, stick it out, have it their way and just kind of keep going as it was. But obviously the economic pressures that we've seen across all countries in OPEC has really just hit a wall here, and I think they had to do something quickly.
And what were some of those pressures that we were seeing play out?
Well, Venezuela's in dire straits. Nigeria's not doing too well. Libya's having issues. But the real issues that you see with the Saudis, on Monday, they injected over 30 billion riyals into their system. On Tuesday, they cut salaries for public service people. And then on Wednesday, they came ahead and agreed with Iran to cut back on production. So you might think that there's some red flags going up here where they needed to do something quickly.
Right, so a bit of desperation there. Now, 3 OPEC members, Nigeria, Iran, and Libya, are exempt from the production cut. Why is that?
Well, I think that, they are countries that are struggling, immensely right now, especially in their economies. And right now, they're really not producing as much as they could have or would be if they're at quotas. So getting back up to those levels, to their regular quotas, is not going to make that much of a difference. And I think that they wanted to give that leeway just so they can get some ground back on at least economic-wise.
Okay, we saw that oil prices rallied about 5% after the news hit, but in 1986, oil prices rallied 50% in 24 hours. Just Amir mentioned that OPEC would drop production. Why hasn't the reduction been more dramatic this time around?
Well, the real physical production cut doesn't come until November, and there's a lot of time and a lot of things that happen between now and then. We have the presidential election in November, obviously. We have the FOMC meeting, which could mean a stronger dollar, and that could affect things also. And again, any time between what they say and what they do, it's a long time. So I don't think the market's ready to react right away until we actually see the numbers fall in line.
Okay, so November, we really have to pay attention and impact on prices. Now, one of the problems, of course, is oversupply. Output will fall by about 700,000 barrels a day. Put that into perspective for us. Will that be enough to solve the oversupply problem?
I think that oil prices have been stuck here in this range between $45 and $48. It's going to pump it back up, for lack of a better term, up to around 50. But I don't think we're going to see too much higher than that. So I think that the new normal is going to be between $52, $50, $54, around there. And that's what I think is going to have an effect on the market. But we're not going to see $75 or $100 ever again. Not why supply is this high and economies are not picking back up.
Okay, Karl, so right now we're seeing that crude futures in the U.S. are trading at $47. Brent is at $49. You think it could go to about $52. Where do prices, though, need to go to make a real difference in the economies of oil-producing countries?
Oh, that's a really long shot. I mean, when you're talking about who's going to break even with this move up to 50 or 55, you're looking at Kuwait, Qatar, the Saudis, obviously, but every other country in OPEC needs it above $70 to break even. So it's going to help. It's just going to probably stave off, failing economies, but that's probably the only issue here. A lot of these countries are still going to struggle going forward.
All right, tough times for them. Lastly, the U.S. Congress has just enacted a new law overriding President Obama's veto, which now allows family members of the victims of the 9/11 attacks to go after Saudi Arabia. How do you expect this to impact the U.S.-Saudi relationship? That's a really big one. JASTA, as it's known, it's really going to be something that we're going to have to wait and see as it gets into a law. But it could have a major effect going forward. If we start seeing lawsuits against the Saudis might have some kind of retaliation. There was talk before that they would pull assets out in treasuries. We could start seeing them pull back on imports that are coming to the U.S. So it really could be something that we have to watch and really might be the big factor here going forward, and not the OPEC cut. Very interesting times. Thank you so much. Our thanks to Karl Larry, Director of Oil and Gas for Frost and Sullivan.